All right, guys. How's everybody doing? Let me share my screen. Make sure we're good to go. Hi, everybody. Let me log in over here. Okay. So we should be broadcasting. You guys hear me? Let me know if you guys see me and hear me. I should be here. Okay. I see myself. Oops, sorry. Let me mute this. Okay. All right. In chat, somebody please let me know that you guys see me, that you hear me, that everything is good, so that I can. Yeah. Good morning, Lee. All good. Visuals are good. Audio is good, right? You guys see me? We're ready to rock and roll. Absolutely. Okay. All right. Lovely, guys. Lovely, lovely. Give me just a second. I just want to see if I can share the link with all my guys here. Okay. Okay, we shared the link. Let me just do this in my Discord. Gonna get ourselves organized here. Okay. All right. Good morning. All right. Really good to see you guys. Everybody chilling out. I'm going to let everybody stroll in. I have the new version of my scalping indicator all ready to go. New strategy. I think you guys are going to really like all of this stuff. My fifth coffee of the day here. As this going on, let me get to the charts here. So, new Apex account. I'm going to talk a lot. I'm going to give everybody a time to kind of stroll into the room. Let me see. Why is this? Okay. Should be in here. Okay. I'm going to let everybody come and stroll into the room. We're going to talk a lot about. I passed my second Apex account. This is my third one that that I'm running right now. But what was fascinating about this is that I passed my first one in one trade. I passed my second one in 1,000 trades. Which was a completely different experience, but in many ways far more valuable experience. I'm going to talk a little bit about. That and some of the things that I learned along the way in terms of values of trading. The psychology of trading, and some other things. And then, I'm also going to talk about the fact that I blew out an account yesterday for a couple of interesting reasons, and I want to discuss that. So I don't want to get into it, but I'm having a little bit of a family emergency here in my house with one of my children, and obviously causing a lot of stress. I've had to be on the road over the last weekend trying to take care of things. So obviously my mind has been elsewhere. I went on full tilt yesterday in my account. And here's what I kind of want to say to everybody who blows an account. What I'm about to tell you is an excuse, not a reason for why I blew the account. It absolutely doesn't matter psychologically what is happening in your life as to how you trade. I know everybody talks about, you need a frame of mind, you got to have all this, you got to have all that. That's all nonsense. There's always going to be some sort of problems. Sometimes the stress will be unbearable. Sometimes the stress will be moderate, but there will be never no stress when you're trading. So using that as a reason is just an excuse. And I kind of realized that yesterday, in a sense that if you want to trade well, there's only two things you need to do. You need to always be prepared for your worst case scenario ahead of time, right? In other words, you need to say to yourself, if the trade doesn't work out, I will go at this maximum size to this maximum stop. And then if it doesn't work out, I will start all over again, even if it means I have to, spend 2 weeks to recover my account, which, by the way, was one of the things that I did with that account. The second account that I passed, I ran it all the way up to like 52,500 and then brought it back down to 51,500 and spent 2.5 weeks grinding back out until I got to 52,000 again, and then grinding it further. And then I got to $59.26 and dropped back. And then $999.72 and dropped back. I just kept on going, kept on going, kept on going. That is what you need to do if you want to trade well. These are the, that is the mental attitude you need to have. And the reason why you have that mental attitude is because in that particular instance, I knew exactly what my limit was for any given trade. I took a trade. I knew, if this trade didn't work out, I was going to just start back from zero. And I think the reason why everybody blows accounts is because in the heat of the moment, they're going 5 large, 10 large, 20 large without any idea what that means. As soon as you go 10 large on any account, any Apex account, and by the way, let me just drop Apex just extended their offers, so they're really huge discounts. Let me just drop a link in here for everybody. Bear with me. I'm gonna go find it. Where's my links? Oh, here it is. Okay, this is actually more than 80% off. It's 90% off. Let me just put those links in here into streaming. So my point is, there are no reasons. There are only excuses for losing. Okay, the only excuses for losing. The only reason, genuine reason for losing is, you took your trades, you didn't cooperate, and you just sort of, wore your risk down. That happens. But the main reason why everybody blows accounts is because they are not prepared for the unexpected. They don't have a terminal point. If you're 10 large, it's only 5 points against you. Whatever. I'm making it up. I don't quite know I haven't thought it through because the net impact, by the way, of all of this is I realized that for the strategy that I'm trading right now, there's only 2 choices I will ever make going forward, which is my contract size will either be 1 large, which is one minis, or 2 large maximum for a flip strategy that I'm going to show you. And beyond that, there's nothing else I'm ever going to do. If that doesn't work, I will start from scratch. If you have that attitude, if you say to yourself, if this does not work, whatever my maximum risk allocation is to my repair strategy, I will start from scratch. That is when you will begin to start trading like a pro. That's when you begin. It doesn't matter whether you start losing or winning, but you'll start trading like a pro. I hope that's kind of interesting to everybody, and I hope you guys are absorbing that, because truly that's far more important than any kind of a particular trade I'm going to show you today is that thought process. Think through what is the maximum worst case scenario you will allow to happen within your challenge, right? Now, that doesn't mean that you can't have a concatenation, a series of worst case scenarios that eventually stops you out. That's natural. It happens. That's why you take 20, 30 evals. They're dirt cheap. That's the whole point. That's the beauty of prop is that, there's always a reset button, and the reset button is very inexpensive. But if you want to play the game properly, you have to have that attitude. Does that make sense to everybody? Let me know if that's clear. Let me know if you have any questions on that. My journey of 1,000 trades to funding was a far more interesting journey than a 1 trade to funding, which was exciting, but I learned nothing. Whereas in this particular journey, I learned quite a lot. Let me know what you guys think. Yeah, Steven says people who tend to lose then double up or triple up on the accounts. That's exactly what happens. It's exactly what happens. And I think that's literally the single biggest reason why you blow it up like this. So anyways, oops, wrong one. Okay, here we go. Here's the here's a tab. Let's talk a little bit about the strategy that I have in place right now. I actually have it on oil of all things. Let's look at the S&P because that's going to be our big primary thing. This is the simple scalper 3.1, kind of the final version. I'm trying to. I don't know. I don't think there's going to be. I think I put the alerts in there. I don't even think I need to do anything else. I'll double check. I'll double check if I need to do any final refinements. But if they are going to be just tiny refinements, the strategy as is right now is pretty much set in stone. And the idea here is very clean and clear. We have an 8-period SMA, right? And what we're actually doing is we're looking for switches in trend. So when trend switches from short to long, from sell signals to buy signals, this buy label lights up. It becomes fluorescent green. That's a switch of trend to the upside. Conversely, when we have a switch of trend to the downside, the sell label becomes fluorescent. You see that? And the primary trade setup. Now that there's, we can have continuation trades. We can take the sell signals within a, if we feel confident there's a downtrend, we can trade the downtrend, for all it's worth. But the real meat of the trade, the sweet spot of the trade that I like to do, is the regime change trade. Is the flip in the regime change. And I'm going to show you an example of a false signal followed by a true signal and how I would trade this. Now, obviously, first of all, you have to understand that the signals become much truer the more liquidity we have. By truer, I mean that there is a genuine sense of continuity. What we're doing basically is saying, oh, trend has changed one way or the other, and there's a high probability that it will continue in that new way, in that new trend regime way. So that second assumption is far more true under a high liquidity time frame, which means when the markets are most active, and obviously they're most active from like 9:30 in the morning until 1600 hours New York, and within that time frame, it's 9:30 to 11 in the morning New York, and then after that 1400 to 1600 New York. Those are the two absolute best times to trade switches, to trade regime changes. And all of this is going to. We're also going to get alerts popping up whenever instrument switches from one to the other, so we'll know how things go. But the basic premise is we take the switch, right? We take the switch. So with switches here from a sell regime to a buy regime, I take the switch. Now remember, this is obviously 3:54 in the morning, not an optimal time, and I get stopped out. I've modified my stops and targets, by the way, everybody, to extend them a little bit longer. So in the S&P, I want to trade for 6 ticks profit, 12 ticks stop. I'm always trading with a negative risk reward ratio. Those of you who are new to the channel know that when you're day trading, you're looking for a 70% win rate and a 1 to 2 risk reward ratio. It's very, very hard to trade with a positive risk reward ratio on the day trading because you're using such small stops and targets. You get the natural retrace of the market is going to stop you out. You're not going to get high probability trades. The key thing is to find high probability entries, right? So, but this is obviously a low probability entry because it's 4 o'clock in the morning. I come in, but what would I do in this particular situation? So I'm long here, 6 ticks to the 1.5 points, 6 ticks to the good, 12 ticks to the bad. On the stop out, I get stopped. So obviously I'm coming in 91.75. The stop would be 88.75. Target would be 93.25, 150, right? So boom, 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 boom. I get stopped out over here. What do I do next? What I do next, and again, this takes a element of faith, but I really like this particular approach. There's 2 things you can do. You could just say I stopped out and I look for the next trade, which is just simply the sell trade over here, and I get short and I make money. Good. Or on a stop out, you look for if it's a green stop out, you look for the first red candle, whether it be the sell label or just any red candle, as your reversal trade, and you double up on the reversal trade. So by doubling up, you wash it away. This loss goes to 0 if you're correct. If it doesn't go to 0, you're -4, right? You're -4. That's your terminal stop. -4 times your profit target. That's the worst I want to lose on any given trade cycle. The whole point is, of course, to avoid the -4 throughout the day. So what you want to do is having a day is +1, +1, +1, flat, 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 +1, +1, +1, flat, flat, flat. And, by the end of the day, maybe you could be +5. And that is a very, very good day where you like, +500 on the day or somewhere around there. That's the ideal day. That's the day that you want to, have as a structure. The other thing we do, obviously, it's 9:30 in the morning, is we do not ever trade 10 minutes of the open, because I've learned many, many a times at the fact that it's a sucker bet, that there's just too much volatility. Even if the signals are okay, we're going to get clipped out on the retraces. So right now, we actually don't have any clean setups here, but let me show you like what I would have done here. So in this particular case, actually, I have a sell regime trigger. I would be short here. This is where we had Nasdaq. In Nasdaq, I would be 10 target, 20 stop. So 579 sell, target 569, stop 599. And I get stopped out at pretty much right over here. So if I get stopped out at around over here, what I'm looking for is a next green candle. In this case, it happens to be a buy label, but even if it's a green candle like this, I would be long here, 607 for 617 target, 620 to wash away this trade, right? If as I got flipped over. Conversely, here's a buy switch signal. I'm switching from a sell regime to a buy regime, and here I just simply get long at 78, looking for an 88 target. That gets done. So now I'm +1 on this. So I'm +1 flat on Nasdaq over the last couple of hours. The instruments that we're going to trade and the things that we're doing is the Dow YM. That's going to be a 15 target 30 trade. The ES, that will be 6 ticks, 1.5 points, target 12 points, 3 points stop. Nasdaq, it'll be a 10 target 20 stop. And gold, which will be a $1 target, $2 stop. We're trading for for $1 up, $2 down, right? I had actually a couple of trades in gold this morning. I think I had this trade. I had this buy trade here. Then I was in the middle of trading battle. But if I traded this, I would have, the next switch trade would have been here. That would have been another +2, right? +2. Here would have been a buy trade. Now, this is an interesting thing, by the way. Gold will do this to you. I'm long gold here with a $2 stop. There's a lot of switching back and forth. There's a sell signal, buy signal. As you can see, the markets are kind of choppy. As long as I'm in the trade, I'm ignoring everything. It's only when the trade is resolved that I am looking around. So I have a switch. Sorry, I have a switch signal in the S&P. Let's see what the S&P has done here. Oh, I have a sell signal. I promised myself we weren't going to take the trade. This probably would have been a good trade to take. Let me see. We go into the trade mode, order, take profits, stop. All right, you know what? Solid. All right, I'm fooling around here. I'm taking a trade. Would it have been? We would have entered at around here at 81.5, and it looks like I'm close. I'm going to just. Oh, and I am done. I'm done on the trade here. So that all worked out nicely for the first trade. I took it because there's clearly a lot of selling pressure. This was a sell regime candle, and it got me done at 1.25. I could have done 1.5. I didn't see the selling pressure. So good enough. I felt this was a strong enough signal that I was willing to take it for the continuity trade. Anyways, I lost my train of thought. Oh, in gold, I was saying what I've done in gold if I had done this. So gold initially is a buy signal. As long as I'm not stopped out, and remember the stop is 46.5. As long as it's I'm looking for 49.5. The 49.5 pretty much happens over here. So I sort of bypass all of this noise, and the 49.5 happens over here. So I'm done. So that becomes another +1 trade. Now we get short over here at 52.7, and this actually gets done. This actually gets done for $1. So I'm done. And now this becomes a false trade. So in this particular trade, I get stopped out, right? This is what I want to show you. I get stopped out on this trade, and I'm looking for the next red candle. So this candle would have been over here, 56.7. I have a 2-point stop. I survived the stop. It's pretty tight stop. It's 56 against 58.8. It goes all the way to 58.1 and then drops, and I resolve this for a wash. So basically, I have +4 on gold if I had traded gold completely, as I had, taken every single trade. You don't really need, you don't need that many. You don't need that many hours, that many trades. You can just, if you can find a decent switch mechanism, for you, you'll be able to, to get it all done in a couple of hours. You're able to get +4 +5, which is about $300 to $400 of P&L, and within a week or two, you should be moving towards your target. It becomes quite viable. So that's as simple as it gets. I'm just waiting now for signals. I'm just waiting for structures. There's, if you want to do lots of F-around trades, like I say, trades that are not parts of signals or structures, here's what we do. And this is what I talked about this actually in the trading battle today that we did just a little bit earlier. When you want to do a full around trade, right, and you're just doing it for shits and giggles, then we're simply going to switch to the micro contract, 1/10 the size, and take our punts. Now, there's two reasons to do this. One, so it's fun, right? We always want to get fun, and if you kind of suppress that urge to take a punt, it will express itself in a much more negative way by you taking a large trade unnecessarily, right? The other reason, which I think is much more interesting and positive, is remember, we're always experimenting. We're always creating. We're always looking for any particular fresh edge or fresh pattern that we think might be interesting that pops up. And you cannot experiment unless you do. You never experiment on charts. You always have to experiment in live trading environments, because no matter what you think it looks like on the charts, it's never the same way in real life. And only when it's validated in real life can you have any confidence that it will be validated forward. So it's really good to experiment. The point being is that you would just want to experiment for pennies, not for dollars. So you experiment on little contracts within your balance. So it doesn't really materially impact your trading, right? So we're trading futures, guys. I'm not trading CFDs with you. There's no XAU. This is the gold futures. There's no signals for me on the gold side. Nasdaq kind of broke up to the upside. Now here's a good example. Nasdaq is just like, looks to me like a nice positive trade. Again, I'm just going to fool around with this trade, right? And I'll just take the buy side on a small contract. It works. It doesn't work. I don't care, but I took this big buy because it looks to me like it sold off hard. It's a big recovery trade through the 8-period SMA. We'll trade it with a 10-20. Give it a shot for the small Nasdaq trade. See if it works. Actually, I'm sorry. I'm trading it with. What am I trading it with? Let's see. It's where am I in my DOM? I'm at 25. Yeah, 10-20. I'm trading it for 10-20, meaning I'm in at 25. 35 is my target. 6 is my stop. Let's see if they want to, if they want to rally. They took it through the moving average. Let's see if they want to rally. But again, not a classic trade. But I'm just fooling around. We want to look at it. S&P is YM is also looks a little bit stronger. S&P kind of recovered. It looks like it's the same signature. Everybody had a big sell-off, recovery post opening. Let's see where it goes. Let's look at the micro contract that was trading all over the place. Not doing much. So I'm just as I said, I'm fooling around here on small size, but generally I'm just looking for what particular next switch setups we might have. So gold really coming down hard now into a big sell down. It's very likely now, if it rallies, comes back down, it's actually going to create a sell switch trigger for us, which it will. When it does, it will post us an alert, because this thing has a built-in alert. Those of you who are interested in using the indicator and trading with me, as a matter of fact, today is Tuesday. Today is our coaching day. You can join me at Pass the Prop Academy. I'm going to put that into the stream right now. Here's the link to Pass the Prop. It's a full 3-month trading session. Many of my traders have passed. Oops, and I got clipped out. It was a full around trade, and we got clipped out on the retrace, which is fine. Like I said, you're free to experiment, right, on tiny size. Oh, it's interesting. Okay, so this is interesting. So we have this was wow, lots of volatility. So this is the first 10 minutes of the day where I usually don't trade big size anyways. There's a good reason. It's a good explanation for why. So here we have, a hard sell signal in the Nasdaq. And so this is this is okay. Yeah, it's not a hard sell signal. So this is the micro Nasdaq, and you will see sometimes that there'll be sell signals in the micro Nasdaq that don't show up in the big Nasdaq. That's because there's a tiny discrepancy in the quotes between the two, and it's very, very important that we do not take the micro signals. We only take signals from the E-mini contracts, because these are the micros are derivatives. They're there for the retail trade. They're not the real market price. They're kind of like, they're just made to be 1/10 the price. And, they'll obviously be sometimes a tick or two off. And just one tick off will trigger a signal or not trigger a signal. So to get the true signal, we're always looking at the major contracts, at the S&P, at Nasdaq, at gold as our true signals. Because if you look at the micros, sometimes we'll get signals on the micros that you don't see on the majors. Like you have a signal here on the MES was a real signal on the Nasdaq, right? And just a fair warning on all of that. Should have gone long. I was thinking I really wanted to go long the YM. That, by the way, if you look at it, they both, the Dow and the Nasdaq, are the strongest. They have the least amount of declines as we hear. And by the way, oil, which I haven't even looked at, oil has been down quite a lot. It's the lowest of all the trades. We haven't done any oil trades, and I don't intend to do any oil trades this week. But we are talking about the idea that oil can certainly be woven in to our scheme of trades. Oil would be like a 10-20 trade, 10-cent target, 20-cent stop. So obviously this would have worked. Not sure if this would have worked. This would have been a short here at 83. And yeah, it would have just barely worked for 73. But let's imagine it didn't. Let's imagine I got stopped out. What would be my next trade? I'm actually curious. I'm going to leave it to comments. Imagine I get stopped on this sell trade. What's my next step? What would I do in this repair strategy that I shared with you? What do you guys think? I'm actually going to put you guys over here, so I think I can watch your screen better here. Yeah, that's better. Anybody have any idea? Anybody want to tell me in chat what I would do? What I would do is do the following. I got stopped over here. I would look for the next candle, which would be over here, and I would repair the trade this way. That would be my trade in gold. That's my plan. As long as you have a plan in front of you, you have confidence to trade. If you don't know what you're doing, then you don't have any idea what you're doing. Like right now, no, not sell the next signal. Reverse. I got stopped on the sell. No, you guys are all wrong. Okay. So again, pay attention. I got stopped. The true sell signal that I had was false. I got stopped. That means I should be doing the opposite. I got to flip to the opposite side of the market, right? So if you look at gold over here, this was a signal that I sold that I got stopped out. The market did not go down, did not make fresh lows. So then what I want to do is, it means that the next wave is going to go the other way. I want to go the other way. If my signal did not work, I'm not pressing the signal. I'm changing my tactics. So I'm going to go long here. We're going to follow the candlesticks, follow the moving averages. Going to follow the flow. Not much going on here, guys. Still very, very quiet opening session. We don't have, let me see what we have on the news here. I'm just gonna look. I'm gonna look off screen here for the news for 1 second. We don't have. We just have the durable goods coming up at 10 o'clock. Why is it 10 o'clock print? A factory or is 10 o'clock? Wow. And jolts. So we have jolts at 10 o'clock. I think basically we tread water until that point, and do nothing because the market is just waiting to see how jolts is trading. I'm just watching trade here. So the other thing, again, I'm going to go small. Just again, I'm fooling around. Just for your elucidation, I'm going to go small. What am I doing here? I'm buying the dip. It was a buy candle. The red candle is a retrace candle. I'm going to bet the fact, okay, that maybe this retrace candle is a dip. I'm probably going to eat my dip here. But and let me modify my stops and targets. I'm in at 17. I want to be out at 22. Let me bring this down. I want to be out 5 points higher, so I want to be out at 22 here. Let's just see if this, if my buy to dip worked. Maybe not. We'll see. Again, I'm just fooling around here. Playing the edges, just finding some interesting ideas. I noticed that if I'm on the buy side and there's a red retrace candle, a lot of times I can buy the bottom of that candle. I didn't get quite the execution that I wanted, but I could buy the bottom of the candle for a pop. And there you go. And I got a little bit of a pop and a little bit of a P&L. So fun trade, right? I'm just practicing my strokes. I'm not trading, the big trade here. But it's keeping me, in the game, keeping me fresh, making me look at ideas. Maybe this could be an interesting, eventually more serious setup that I can play with. But in the meantime, again, as I said, you won't know until you do it. But if you do it too big, you will just ruin you need to do it in a tiny size, but at size in order to actually see if it's working or not. Experiments only work if you do it in real market environments. So hopefully that makes a lot of sense to you guys. Oh, this guy clearly doesn't know what he does. Fuck you, motherfucker. Did you pass 2 evals? Did you trading through 2 live accounts? Yeah. Good luck. I don't know. Am I up on this account or am I down on this account? Huh? As I told you, I'm fooling around right now. I'm taking trades just to have fun with you guys because I have no setups. But go ahead, tell me how much I don't know, because I've only had about 20 traders in the last month and a half pass the eval. Please tell me all the stuff I don't know. And then please show me your past certificates, and I'll be happy to eat my words. Do I have a list of rules with this indicator? I do. And if you want to join my prop trading coaching, I'll be happy to give you the list of rules, how to trade them. Now we got to switch in gold, actually. So right now I'm not trading anything because we have news in front. Or better yet, if we have news in front, and because obviously news is going to be a big impact at 10 o'clock, what we'll do is we'll just trade small on this contract. Oops, sorry. I'm going to trade small on this contract. So we'll take I'll take a 1/10 size on this particular trade because it's a legitimate switch trade. It's a legitimate switch trade. But again, you need to be mindful of your market environment. Could I take the full trade? I could, but if the durables comes in really off number and we have a big spike against me, it's an unnecessary loss. I'm always mindful of the 10 o'clock news, always mindful of the 8:30 news, and you want to sidestep those things. It's unproductive to trade into news. It's very, very productive to trade post news. Post news, you have some of the greatest setups ever. So this almost came in. You see that it almost hit my target. and then came back down. And that's, that's gold in a nutshell. It can be um, uh, it can be that crazy. So it just came in, and now it might actually pop me out on a reverse, and that's why I traded on such a small basis. Had I traded the full account, then you really have to have your finger on the trigger. And when it came super close like this, into the dip, you could have, needed to flatten out. But as fast as gold is, you can see how hard it is sometimes to flatten out on that position. That literally was, I probably wouldn't have had a chance to flatten out on that position. But now that I'm trading small, I'm just letting the trade float. If it works, it works. If it doesn't work, we will just let it go. Again, small, tight trade into the news, which is why it's not a really true legitimate trade. Is that GC1 is a artificial contract? We're trading the actual live liquid contract, which is the futures, the August futures contract. GC1 is like I think a permanent, it's a fusion of the prices. So we're actually trading the real contract, the live contract. So here I am over here, almost target, and now I get target. So had I had the big contract, I would have made money on the big contract. But as I said, I didn't want to take the trade 5 minutes before the news. And you saw how much heat I had. I had literally 0.78 of heat before it eventually hit my target. But all's well that ends well, and the trade gets done. Okay, my job here is to help you kind of see these setups and learn the setups, learn the practices of the setups. So this setup was basically triggered off the idea that we had a sell switch. I sold it. It retraced pretty hard against me, and then eventually took the direction of the downside, which is exactly what it's doing. What this is basically telling you is that gold now is in a sell regime on a very near-term basis, right? It's in a sell regime. When it goes to this bright blue, it tells you that bright green, gold goes into a buy regime, right? And if you had long here, you'd have had +1 easily as a trade. So it's just that simple. I do nothing more complicated than scalp the 8-period SMA on a short-term basis. I try to get plus 5 units of profit a day, and if I can do that, it's a good day, and it puts me into evaluation. The reason, by the way, why this approach works so well, it's not that it's the most profitable approach, and it's not the one that makes the most money, and it's not the one that that maybe you would ultimately use in your own accounts. It's the best approach for passing the prop test, because as you can see, I don't have any kind of significant drawdown, and my equity drawdown, which is a more complicated notion of how they measure you. In other words, the highest high I'm going to get is always within $100 of my actual high. So right now, for example, I started at 50,000. My stop out was 4750. Now my stop out is 47,800, right? Not much worse than when I started out. That's the advantage of me scalping up and up and up and up and up. My drawdown hasn't really moved up a lot. If I was doing something like a swing trader where I ran up, $1,000 and then ran back down, my stop out level could be as tight as 49,500, right? So I would only have like a couple of $1,000 worth of leg room. This gives you, by trading it this way, I have lots and lots of leg room to trade it out properly, right? Okay, so news is coming out. Still got news coming in for a second. What else? Hit me with new questions. Does a ChatGPT bot you built work the same as a simple scalper in this scenario? No, it's totally different concept. Totally different concept. I'm actually going to building a new one. Hopefully you guys will like it. I love ChatGPT as a thing. I did. If you're asking me, did I build this one with ChatGPT? I did. It's ChatGPT is really getting very, very good at being able to translate my ideas into concepts. It was actually very, very. I've gotten to the point. I said to on the other stream today that I'm now at a point where I've completely anthropomorphized ChatGPT. So I had to do some very kind of a nuanced, coding that I wanted to do. It did it perfectly. It wrote the code just correctly. I didn't have to correct anything, and I was like, "Good job, thank you very much." And I'm like, I'm talking to it like I talk to my dog. Good boy, good boy. Here's a treat. It's really funny how we start to anthropomorphize technology. And of course, it said, "Thank you very much." I actually think that that the software is programmed for positive reinforcement as well. Although I know it's just software, but it was just funny. It was just funny to see that. Okay, we are 2-3 minutes from news. Let's see if there's any flow here so far. Today, I think, should be a relatively quiet day overall. And obviously, the other thing I was going to say is, guys, I love doing the 9:15 to 10:15 streams with you guys, but frankly, the real money trade very often is a 10:15 to 11:15 trade. And I'm kind of thinking that maybe next week we try to change our time. I'm actually curious. Let me know if you guys would be open to that. If we try to trade what I call the golden hour. The reason why I like the golden hour, the 10:15 to 11:15, is because the news is all done. The pre-positioning and the opening of the trade is done, and the Europeans got to close out their books. So there's generally some kind of a trend directionality at that time. So I kind of really want to try the 10:15 to 11:15. It's going to screw me up on a couple of business engagements. So it might have to be just sort of a special session, but we'll try it. I mean, I think it's worthwhile. Also, I haven't talked to Kay about this, but I'm kind of going to let you guys know. I'm really going to beg her to see if she can do it. I would love to do. We might do live NFPs. It depends if she's got the time, but I would love to have her do live NFPs with me this Friday, like a big global one where she trades FX, and then we'll trade equities after that, because I think that would be really, really interesting as well. So I'll let you know. If we can make it happen. But I'll talk to her today. And if we do, I'll post it up obviously on the channel. And if you guys are subscribers, be sure, by the way, everybody who's listening, please be sure to subscribe to the channel if you're not a subscriber, because that's the best way to get notification of all the live trades that we do here. Here we go. All right, sell trades in this. Let's. I'm gonna monitor the news here for a second. See what's going on over here. Jolts is 28 seconds away. Market looking for 835. Factory orders market looking for 06. Durables market looking for 04. Let's see what the prints are. We're 15 seconds away from the prints. We'll see if anything is going on here. $8:30, $10:30 is definitely the best time. It's absolutely the best time to trade. Okay, so Jolts is negative. There's more Jolts, 8059. Factory good orders are minorly positive, 7 against 6. Durables are mildly negative, 6 against 7. But the Jolts being negative is super positive for us. Hang on. Let's organize ourselves. Super positive for us, although the buy signal is kind of disappearing. We're going to give it a second here. Absolutely not. Don't want to chase the trade. And the reason why it seems to be super positive for equities is because a weak Jolts, it's all about, is the Fed going to cut, right? And the market sort of reacted to the fact that a weak Jolts number means the employment numbers is really slowing down. Puts the pressure on the Fed to cut rates. That's positive for the market, at least for the near term. Of course, if you kind of think about this, it's I'm looking for, green candles. That's it. That's a different alert. No switches for me on the MES. I could. Let me look at this. I'm just looking at Nasdaq. I will take. Oops, I'm chasing. Now it's too late. Now, let me see. I went long without a stop, so now I have to put in a stop. Okay, you know what? I'm just going to take out. I took out 12 points out of that one. Again, why did I take a long trade here? Not my my setup trade, but I took a long trade here because remember, the underlying thesis of what I try to do is to always be buying above the moving average, selling below the moving average. I want to be buying strength, selling weakness, right? The fundamental news here produced a strength impulse signal. It did not produce a buy or sell signal for me because the switch, the composition of the candles didn't quite complete to where we needed to be, but it was good enough signal for me to try a small trade, to try a fundamental flow trade, this was basically a quick fundamental flow trade to the upside. So now, put myself back up on this particular trade. It was so fast that I didn't even get a chance to put a stop in there. So I just exited myself out quickly. What's going to happen now? We'll have to watch. We'll have to see if price kind of rebuilds itself, a more sustained, buy trend as we go forward. I still think that none of this data is so out of consensus, so market moving and shattering that we have definitive ideas of what's going to happen. Tomorrow is going to be a much bigger day. Tomorrow, hey guys, okay, I'm glad you guys are liking my help here. Sorry, I'm just reading your comments here. Tomorrow, I think, is going to be a really big day. Tomorrow is tomorrow Wednesday. Yeah, tomorrow's Wednesday. We're going to trade 9:15 probably to 10:30, and maybe we won't even start trading till like after 10 o'clock because we have ISM services tomorrow. That's a huge report. It has the employment component in it, and I think it's going to have big fundamental impact on the market in terms of directionality. So I think we'll have some really interesting opportunities to trade there tomorrow. So I have some questions here. Say more about managing P&L tolerance. Okay, seriously, I love your handle. Very happy to talk a little bit more about that. So what I was saying is that you should never have excuses for trading. What I mean by that is, there's 1,000 things that will take our attention span away. There's 1,000 things that will put stress on us outside of the market. The markets themselves put a lot of stress on us. So there's 1,000 things. Your dog could walk across the keyboard, or somebody walks in while you're focusing on a trade, and so on and so forth. None of it matters, because when you're walking in as a day trader into your environment, literally every single scenario needs to be thought of ahead of time. The reason we go on tilt is a kind of a industry term stolen from poker. When somebody plays poker and then they just lose all sense of risk control, and they basically start betting wild. They're just trying desperate. It's a guy who's underwater who's doing anything they can to swim up above the shore. That's literally what happens, right? It is the same psychological and mental and physical process as going on, right? Sorry, I'm setting myself up for this trade. Again, I'm trading this. I'm going to trade this small. Oh, did not. Hang on a second. Let me get in here. 14 seconds. Yes, I'm going to switch to the small contract on this. At 645. I'm going to sell. Okay. Short this off that signal. See, the signal was off the big contract, but we took the small contract to the downside. I'm just gonna take it. Just gonna take small clips here. I'm not gonna complete the trade because it's very Nasdaq of all the. I like to trade the S&P. I like to trade the Dow. I like to trade gold. Nasdaq is by far the worst contract to trade because of this bullshit, in and out, in and out, in and out. And you need to give Nasdaq enormous amount of room to make it happen. To give it breathing space. And I'm just not willing to do it. It's just it's too much work for the effort that it provides. I know everybody loves to trade Nasdaq, but Nasdaq on a scalping basis, by far, in my opinion, the most difficult instrument to trade, simply because it has the highest retrace risk. Now, you still would have survived this retrace risk over here. You came in at 96. It went all the way up 11. The stop would have been 16. So you came in within 5 points of full retrace risk, and you need to make 86 on it. Now, I covered up at like 85, so it's close enough. But look, you see this? See this nonsense? Very, very tough to trade. Very, very tough to trade. That's why I take Nasdaq on a small size. Just clip it. Take my profits when I can, and focus on the S&P and the Dow. It's very fast. It's too fast, I think, for super short-term trading. It's great for positional trading if you have a view, but for short-term trading, it can be just brutal. Unless all you do is you trade Nasdaq and you are prepared. This is the key point I was making. You need to be prepared for the worst case scenario before you walk in, right? So, like my worst case scenario, I know I'm going to lose, 4x my size, 4 times my size, 4x my size, not 4x. And if my greatest X is, so let's say my greatest X on S&P is 4x my profit, not 4x my loss. So 4x my profit on the S&P is 75. So 4x my profit would be 300. Right? 300 would be my max loss on the S&P. On gold, my max loss would be 400. So the worst loss I'm going to take is 400, which is gold. I'm going to take a loss of 300 on the Dow and a loss of 300 on the S&P. Those are my worst losses. Now, once I know that, and remember, I have like a $2,500 drawdown budget. I'm well within the drawdown budget. If that means I have to, kind of pick myself up and start from scratch for that day, that's what it means. But if you have that attitude, there's very little that the market can do to trip you up, because Kathleen is talking about greed. Yes, this is the whole point of absolutely curtailing your greed. It's not the only way to curtail your greed is not to say, I don't want to be greedy. It's to know ahead of time at how much pain you're willing to withstand and why it should be. The reason why I think we go, I kind of thought about this yesterday. The reason why we go into the tilt cycle is because something surprising happens that we don't expect bad. So surprising bad happens that we don't expect. And that pisses us off. And we're like, no, I want to recover that bad. I don't accept that bad. But if I already know ahead of time, oh yeah, I planned for this bad. This is a bad that, there was planned part of my plan. It sucks, but it's not surprising to me. It's the surprise that makes you lose control. That's what I think is really going on when we go on tilt. It's the surprise that makes you lose control. And when you have surprise, surprise, not good surprise. Good surprises are always fun. But the bad surprise, what makes you lose control, and that's when you go apeshit, and that's when things go off rails, right? So very quiet day today, guys. We did a little bit of business. I still like if you count just the actual number of trades, there was only one losing trade, and I think I did 4 or 5 winning trades. We can just actually see them. So there was one losing trade, there was 1 winning trade, 2 winning trades, 3 winning trades. So 3 to 1 on Nasdaq, 1 to 1 on gold. Gold, we had a winner, right? It was over here, and 1 to 1 on the S&P, like a real trade. So actually, 5 to 1. that's the ratio that I want to be at. That's a good ratio. I want to be at a 5-to-1 ratio, right? It's as good as I'm ever going to be. Remember, I'm trading with 1 to 2, so if I'm winning 5-to-1, I'm well ahead. Yeah, the surprise. Yeah, seriously, just thank you for making me, think this through. It's really the negative surprise that puts us in tilt. And I just realized if we can just minimize the negative surprise by thinking it through ahead of time, thinking through our thoughts, it would be very, very helpful for us. Anyways, hope you guys had fun. It's a little bit of a quiet day today, as it can be sometimes ahead of big events. I will see if Kay will agree to do non-farm payrolls with me. I'll let you guys know tomorrow. We'll definitely let everybody know that. And what else? And otherwise, I'll see you guys tomorrow. We'll trade the ISM together, and we'll trade the structure together. Everybody who's in my room, let me just do one last thing. Make sure. Let me give you the discounts for. Where am I? Hang on a second. Now I got to get my glasses. I'm going to give you guys discounts for Apex for one last time, because this is a 90% discount, because they're still running it. They just extended it. So let me make sure you guys lock in those. Guys, remember I was telling you that the ability to experiment only happens if you're trading for real. And there's nothing like using Apex to kind of be able to experiment, and then obviously to get funded when things go well. It's incredibly cheap right now. It's just literally $16 for this $50,000 account. Those of you who guys want it full on coaching, I'm gonna have coaching. Oh, sorry, I gave you the wrong. Can I delete this? Sorry, I need to delete this. Remove. Okay. Let me give you my coaching link, because tonight is coaching night. Very, very excited to show this. And by the way, this particular indicator, this version of the indicator, I'm going to release into my coaching tonight, so everybody's going to be able to download it and use it. So I think this is the most intuitively visual indicator that we can do. Of course, you guys have suggestions. I'll make some suggestions, but it's a very, very cool looking indicator for what I need. Other than that, any final questions? Any final thoughts? Let me know what you guys thinking. Happy to hang out with you here. Looks like you guys are good, right? Good session, 5-to-1, in a relatively lackluster kind of a session here, and we'll pick it up tomorrow. Thank you so much, and I will see you guys later. Everybody have a wonderful, wonderful day. Take care.